We're back with Barry Schwartz, the one and only of Baskin Wealth Management. Barry, we dealt with Berkshire. My face is still red there. Warren Buffett is still with us. Google, you see them as a major winner from AI?
I think the announcement yesterday from Google with all the new products that's going to be offering to its customers is groundbreaking and really sets, in my mind, sets to rest the worry about Chat GPT and these other chat engines, AI engines, taking away some of the market share. Really, what Google's now offering is the ability to get full search on their websites, as well as access to AI and it's really AI for the common person, right? Not the tech nerds or the young people. What the big risk is for Google is people start searching outside Google, leaving its platform. What we think now is it's going to make its searches even that more valuable if people click on the links, and as well as keeping people around as they get better answers from AI, the stuff that they're looking for. We don't have hours to talk about all the other products and stuff that it's offering, but it's just stunning the amount of stuff that Google's offering, and as a result, we think it's going to create more sticky clients, as well as offering really a better experience to compete against Chat GPTs of the world. So the bottom line is the stock is trading around 16 or 17 times forward earnings. Companies should probably do about close to $10 a share of earnings in 2026. Beautiful balance sheet, companies buying back stock, companies paying a dividend, raising the dividend. The company's still investing in these moonshots. Waymo, the robo-taxi is just getting started, although that will take years to actually move the needle in terms of profits. So you can tell me all the worries you want, but I'm going to tell you back that that's already priced into the stock here at $167, $169, given the valuation. This is a company that's still growing bottom line at double digits and should still grow top line at double digits as well. So I think a lot of the worries are reflected already in the valuation.
The freight stocks have been under something of a cloud over the past few years. You like the look of TFI International?
It's been absolutely destroyed. It's one of our largest holdings. Unfortunately, it's fallen about 35% year to date. Pretty painful for our clients. But for us, we've held it a very, very long time. We've owned it since 2004. This is not our first rodeo with this company with a cyclical downturn in the freight business. Obviously, the freight business, if you're going to have 145% tariffs on China, is kind of the worst place you want to be in the short term. Obviously, the relief about pausing those tariffs have helped freight and railroad stocks. We just see eventually things will recover. And this is a company that in a normal environment should do about $8 US share of earnings. And in the meantime, it's making acquisitions, it's buying back its own shares, it's trying to cut costs. This is going to be a $200 Canadian stock in the next 6 to 12 months as people get comfortable and see that the freight recovery is underway. In the meantime, it's one of the highest upside we can see of any stock in our portfolio. So we're just buying a lot more. We'll suffer through the pain if they have 1 or 2 bad quarters, but I'm looking out 12 to 18 months for much better times and much better earnings results from TFI.
Barry, when you read market commentary, analysts, the media, wherever, is there a cliche out there that you wish people would just put a stake in it? Or is there a truism that you think investors really should not be paying attention to? Or are we missing anything?
Well, I'm a long-term investor, right? So any of the things where it says sell in May or go away, and all these things don't catch a falling knife, and those are all trading terms that have no relevance for me. I don't look at day-to-day stock prices and let that determine how I'm going to invest my money for clients and my money for myself, as well as money for our clients. What I look at is what the companies are saying, the fundamentals, and we do our own research based on business. Warren Buffett has said it many, many times. He doesn't look at the macro. He doesn't look at the economy when making investment decisions. He looks at the people. He looks at the management. He looks at their skills at allocating capital. He takes his best guess on if people are going to be using more of their products and services over time. Does the company have pricing power? Does the company have high returns on invested capital? These are the things that matter to long-term investors. And so that's what I try and focus on. The tariff worries, chances are there's going to be another worry in 6 months that's bigger or worse than the tariff issue. And we'll be talking about that, and we'll be all concerned, but the market will probably already price that in and move higher from there. So I don't listen to market truisms. I listen to the fundamentals of our businesses. I'm a business owner, and if the fundamentals are improving and it's up to the right, you got to be an idiot to sell it based on short-term worries.
As you say, shareholders are business owners. Companies aren't always communicative, though. I'm thinking about, I'm not trying to run them down, but say Constellation Software. Certainly, latest I heard, they don't bother holding earnings calls. And some companies just don't reach out to investors. Does that discourage you?
Companies get the shareholders they deserve. Constellation Software is trying to build a legacy of similar to Berkshire Hathaway. Focus on what we're saying in our annual general meetings. Focus on what we're doing to grow our business. Look at the fundamentals. When you look at Constellation Software, when it releases the results, there's no filler. They don't say, oh, we had a record quarter and we did this much business and blah, 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 and we're so excited. They just show you the numbers. And so these are the types of businesses that I want to partner with. I'd prefer if nobody has conference calls and give guidance. That stuff is ridiculous. It's nonsense for a long-term investor. So I want to partner with people. And Mark Leonard at Constellation, Warren Buffett, and Greg Abel at Berkshire Hathaway, they're so rare. So once you find one of these rare companies, hold on for dear life.
I have heard it said that a lot of CEOs find themselves using a lot of their time to manage the stock rather than manage the company.
Once again, that has nothing. Well, maybe their incentive structure is all messed up, right? Maybe they get paid based on how well the stock does. So they're always trying to do things to goose the stock, share buybacks, saying nice things. That stuff is important, obviously, but long-term performance comes with great results and smart allocation of capital and the right people with right incentives that are aligned with you as a shareholder. They want you and them and their employees to do well over the long term, and that's all that matters. That's what I want to do with with my money.
Barry, thanks very much indeed. Always great hearing from you. Barry Schwartz, Chief Investment Officer and Portfolio Manager at Baskin Wealth Management. Coming up,